today had a decent amount of follow-through selling, especially on the open. First two bars were both bull bars, which actually looked fairly optimistic for the bulls. We opened right here and created this little double bottom in the first two bars. And it opened within that yesterday's final leg right here. So it looked like the market had a chance to try to rally some on the open. Ended up selling off pretty strongly. This third bar, it's a big bear bar closing near its low. With the context of us having so much selling pressure the last few days, I think it's good to try to be looking for shorts below bear bars. So this bar 3, big bear bar closing on its low, closing below the past several lows here. I think that's worth trying to go short and trying to get a swing trade down. So it's going to something like this. You're shorting there. If you go for 2 times your risk, you're going to be trying to get out around this area. The follow through bar, same thing. It's better to try to sell below some of these entries I have here because of the larger context that we're in. Pullback and then bear bar. And this is once again better because we are in a bear trend. So it's good to be trying to get short below bear bars in a bear trend. And pullback, same story here, another bear bar closing near its low. As we start to get lower and more bars pile on, like down here, I would be more hesitant to be selling because the chance of there being an opening reversal is there. And we've been below the moving average for so long. We're starting to get very far from the moving average. Once you're down here, you'd be about 40 points away by this close right here. It'd be 40 points away. So it becomes more difficult to short down here because you're getting later in the trend and you still have that chance of it being an opening reversal, which ultimately it essentially was, right? We're much higher than the opening range lows. So these bears did not get as much follow through as they wanted today. Well, the bears from this leg did not get as much as they wanted. They got a little bit here, and a lot of people were looking to try to get short again here. Ultimately, though, it did not go down. Here, biggest pullback of the day up to that point, and there's a second entry short. So this is actually just a first entry short because I thought this low here went below this low, but it didn't. It looks like it just double bottomed right there. So it's a first entry short, but it's still 2 legs up. So first leg, pullback, second leg in a bear trend. Good to be trying to short below that. After such a big move like this, you would expect at some point in the day for there to be a second leg. So pullback, maybe this is the second leg, or maybe after the market goes up, there's going to be a larger second leg later in the day, a delayed second leg. And I thought that's what this was going to be. So I was looking to get short around here, and I'll talk about that in a second. And that looks a lot like what we had yesterday. It's a big sell-off, small second leg, probably going to get a delayed second leg, and we did. And at the end of the day, it sold off. So here's that delayed second leg. And I thought we were going to get something like that today. And unless we sell off in the last few minutes here, then we will not get that delayed second leg. I have this bar marked as a buy. Now, normally I talk about you want to avoid trying to buy in a bear trend, especially one as strong as this. But what gives buying above here better odds is look at yesterday. We had basically the same setup, strong sell-off, pullback, second leg that didn't go too far, and then pullback that's going to getting above the moving average and a good close. And the market ended up going higher from there. So looking at that, we're coming up against the same kind of setup with this bull bar. So I think that's a good idea to try to be looking to get long above this. If the context was different, where we did not have a day recently where bulls were able to win above this, then I'd probably just avoid it. But since the same traders that were trading yesterday are trading today, and the market had the same kind of pattern, then taking that buy probably would work out. And if you go for 2 times your risk, you'd be getting out right up here at the top of that bar. So you'd be, that's a great trade there, and getting out real quick before the market turned back on you. An idea is buying above this bull bar or this bull bar. I'll mark this lower one. The issue here, I think, is that once again, the context is that we are in a larger bear trend, and we're coming to get up against this double top right here. What's good for this is that we have a second entry short, first entry, then second entry, that's failing. So that's good for the bulls there. It's also a second entry long. So first entry, then second entry. So that's good for the bulls. It's a little bit more difficult to take that because this move up and then this pullback was weaker than the prior day's move up. On the prior day, we had 8 bars in a row through here that were all bull bars. Here we had a bull bar, then a bear bar, then 3 bull bars, then basically sideways. So it's weaker than that leg up was yesterday. So that makes this a weaker buy, which is why I didn't have it marked initially. But looking at how it's a second entry, also after a failed second entry short at the moving average, decent chance that would get follow through, and that would be a second leg up from this. So first leg pullback, and then bulls looking for a second leg up, which they got. As the market's moving higher, I like these bars for either a scalp or a swing trade. They're closing above their midpoint. They're above the moving average. The market might be trying to make an attempt up to the open of the day. And if it is, and it did make an attempt up, then that would make these good buys there. So by this point, even though we are in a larger bear trend, it looks like bears might be trapped for a little bit, and the bulls were going to try to make an attempt up to the open of the day, and they tried, they couldn't quite get there. I was talking about getting short down here, and I actually had my stop order right below this bear bar, and I was ready to get short, but it didn't fill. It double bottomed and did not go one tick below, so I didn't get filled there. It makes me wonder if the market did go below that bear bar, all of those stop orders would have been filled, and would that have pushed the market down further, or would it still have reversed up like this? You're not sure. It's interesting to think about, though, how much one tick might matter. If it had gone one tick lower, probably a lot of bulls would have given up. Think about the bulls that bought through here, hoping for more up, or bought the close of this. Once they saw this, they're pretty disappointed, probably going to get out, and they'd be getting out right below that bar. So if it went below, I'm not so sure we still would have reversed up. I think we probably would have gone lower. So it just shows you how important one tick is. I think this price action has been a lot of fun. Bigger bars, bigger range, but it's been fairly easy to read from my perspective. So it's been enjoyable to sit and watch and trade. A couple things to note: Bitcoin has had a pretty big sell-off. You can see this is the Bitcoin daily chart. Had a big sell-off today. This is the Emini daily chart, and looks like today will not have a strong bear close, but it will be a bear body. Why are the bears not getting as much follow through as they want today? Well, we're coming up against these lows of the trading range, like this low, and coming up near the 200 moving average and the this trend line we have. So bears that were shorting here probably taking profits around this area, and that's what I did. I did have a small short position, and I took profits today right around this low here. Looking at the weekly chart, we don't look at the weekly chart too often, but I think it's important to look at here. Look at this trend line on the weekly chart, weekly Emini. That's coming up right through here and coming up right into the price that we're at today. So that's going to act as a lot of support, which is another reason why this bear trend did not have as much follow through selling until the end of the day. Yesterday did, because it was higher up in the range that we're in, but today was coming up against this trend line on the weekly chart and also the 200 moving average on the daily chart. So there's a lot of support that is sitting right in this area. Could we go lower? We could, but we're probably not going to immediately just break down and sell off down to like 5,000. More likely, if we break here, that'd be a break of the trend line, and then the market would need to go up and test the highs again. And then the bears make an attempt of a bigger sell-off. But until we get that break and then test of the highs, probably wouldn't sell off too much. So probably more in a trading range environment and slightly bullish. That could change in just several, and that could change in a month or two of these weekly bars. But for right now, probably not going to get too much more selling out of this. And if we do, I would not expect the selling to have follow through. So let's say the market next week breaks down like this, down to 5,800 or so, which would be a good area because of the support we have right here. Draw it in. Like we have these closes right here, and then also these lows here. There's a bit of a gap right there. It's clearly a support resistance area around 5,800. So if we get a leg down, it'd probably come down and test this, but then we saw this big bull trend that's going on. The market would need to come back up and test the highs, and then from there, the market would decide, is it going to make a move lower, or is it going to continue moving up? So that's kind of how I'm reading the market and looking at it over the next couple months. If you guys have any questions, let me know in the comments. Also, consider joining the Discord. And we had some good conversation on the Discord today about a 15-second chart, trading the 15-second chart, and just talking about trading. So if you're interested in that, join the Discord, and we're on there talking about trading. All right, see you guys.